I'm Miss S, and today we're talking about financial institutions. So if you have money, you probably want to keep it secure. Keeping it under the mattress just isn't cutting it. So what should you do? Where should you turn? Luckily, there's an answer. Financial institutions are an integral part of our modern money system. Knowing which financial institution is going to best meet your needs and help you meet your financial goals is really important and much preferable to storing your money under the mattress. There are 5 main types of financial institutions we're going to talk about today. And interestingly enough, not all of them are actually banks. The first type of financial institution we're going to talk about is the commercial bank. Chances are, this is the type of financial institution you're probably most familiar with. You may even have a checking or savings account already. If so, kudos to you, making smart choices. Well-known commercial banks include Bank of America, Wells Fargo, and SunTrust. These are banks that you've probably heard of before, as they are major regional or national bank chains. Commercial banks provide a pretty wide variety of both consumer and business financial services, including savings and checking accounts and various types of loans. One of the main ways that commercial banks attract customers is through advertisements. You've probably seen an ad like this in the mail or in a newspaper trying to convince people to deposit their money with SunTrust. The last thing to know about commercial banks is that they are insured by the Federal Deposit Insurance Corporation, or FDIC. This is a really important organization because it essentially helps stabilize our money supply and keeps us from having the sort of up and down panics that plagued the economy prior to the Great Depression. The FDIC insures each saver's account all the way up to $250,000. The second type of financial institution we'll talk about today is the credit union. What makes a credit union different from a commercial bank? Well, first of all, it's a not-for-profit, members-owned institution. Although it's owned by a board of directors, members are the ones who get the profits in the form of annual or semi-annual dividends, usually. Some credit unions you may have heard of include Navy Federal Credit Union and Memorial Health Credit Union, if you're watching from Savannah, that is. Another way that credit unions are different from banks is that you can only bank there if you are a member. Generally, members have something in common, whether it's status as an active military member, belonging to a certain union, in this case, the International Association of Machinists and Aerospace Workers, or being employed by the same organization or business, in this case, the Savannah School District. Credit unions provide a variety of different consumer financial services, including savings and checking accounts and different types of loans. Credit unions also tend to offer higher interest rates to members, unlike commercial banks. They are also backed by the FDIC, specifically the National Credit Union Administration, or NCUA. Again, up to $250,000 per saver. The third type of financial institution we'll talk about is the Savings and Loan Association. Examples of savings and loan associations include the Great Southern Bank and the Liberty Savings Bank. However, these type of institutions tend to be less well known than commercial banks. This is in part because they provide a much narrower range of financial services, usually related to home financing, like applying for a mortgage. A savings and loan association account can be a really good idea though, especially if you're trying to save for a financial goal like a house. This is because, like credit unions, savings and loan associations tend to give higher interest rates to their members, which allows you to save more money faster. The next type of financial institution we'll discuss is the brokerage firm. Like savings and loan associations, brokerage firms tend to offer a much narrower range of financial services, but can still be really useful to utilize. Do these logos look familiar? You've probably seen them before, maybe even seen some of the commercials. These are all really well-known brokerage firms that a lot of people use. Brokerage firms function by taking their clients' money and investing it for them in a variety of investments such as stocks, bonds, or mutual funds. This can be a really good thing because when you invest your money, it tends to multiply. Whether you decide to buy stocks from the E-Trade baby, anybody remember? Anyone? No? I'm old? Okay. Or whether you decide to buy some savings bonds from the government or a corporation, brokerage firms can help guide you to growing your money more and can be a great option in your financial institution arsenal, if you will. The last type of financial institution we'll talk about is the payday loan company. Not gonna lie, not a fan of payday loan companies. Payday loan companies specialize in a small range of consumer financial services, mostly things like check cashing or small loans, usually up to $1,000. There's a problem though. While offers of quick money, easy check cashing, and other too good to be true financial services sound really good to somebody who is really in need of money, which is who payday loan companies tend to target as their demographic, there's a big catch, a 400% size catch. You see, these quick loans that payday loan companies give people without checking credit or being picky about whether or not they can pay it back often come with huge interest rates, literally up to 400%. Check cashing fees are often astronomical as well, sometimes as much as 20% of the value of the check that you're cashing. So for every $100, that means that you're paying 20. There are accounts from all over the country and world of how payday loan companies have negatively impacted consumers. In short, this. I hope this has given you a good overview of financial institutions and allowed you to make some better choices when it comes to time to open your own checking or savings account. Hopefully, it is easier for you than this fake math is for Miss S. Thanks for watching. For more economics and social studies content, subscribe and follow Miss S on Instagram and Twitter at Miss Sauer STEM.